So, Dan, the Federal Reserve basically led markets in 2022, and they're forecasting 2 to 3 more smaller rate hikes this year. Is the Fed then going to lead markets again, or are we going to go back to the earnings?
Well, I think the Fed is going to continue to have a significant impact on the market. Now, remember, over the past year, meaning in 2022, the Fed hiked rates 7 times. And why? Well, we were at a 40-year high for inflation. Now, we are seeing inflation starting to recede. That's a good sign. Now, the Fed is talking about backing off, taking the foot off the gas pedal a little bit related to interest rate hikes. However, we have Congress, on the other hand, spending like there's no tomorrow. So now, are we going to end up in a situation where foot on the gas from Congress, foot on the brake from the Fed, and by doing that, we get nowhere, right? We just end up doing donuts. We're rolling in circles. So what I think is the Fed comes first, and after that, then it goes back to earnings.
So glass half empty on that side. So, Erin, are you keeping money on the sidelines then, Erin, building up cash for that bottom, for where it is? And what signs are you looking for that we're at the bottom?
Right. And absolutely, yes. I am keeping cash on the sidelines. Right now, when you're looking at next year and forecasting, and much like Dan was saying, sort of this push and pull, basically for the first half of the year, we're expecting earnings to contract. So to be less than the prior year, and then for them to ramp up in the second half of the year. Still very moderated. There's a lot of hesitancy out there, but definitely pick up and have a more positive outlook in the second half. So I think if we are going to get that turnaround, and it could be quite big, because like I said, prices are pretty cheap already, it's going to be maybe in your second and even third quarter. I think we might still have a lot of negative news to pull through in that first quarter, but ready to turn at any moment.
Right. So, Dan, what sectors do you like in the new year? And are you seeing that, too, maybe jump in again back in May or June?
Well, you know, Edward, I don't believe in trying to time the market. No one really can do it effectively. Yes, sometimes you do get lucky. But I look at this market this way. Right now, you have a lot of good buys out there. Let's face it, the value, particularly in big tech, has come down significantly. So if you like big tech before, now you're going to get it at a super discount. Why not take advantage of that? So I think it's about the long-term view. If you liked the company before, then keep buying it. As far as what I see as a real positive in 2023, I really like what's going on in the energy sector and utilities as well. They had a tremendous year in 22 in both sectors, and I anticipate that's really going to continue through 2023.
All right, I want to get this in here. We have 15 seconds each for both of you. Erin, what is your market resolution for 2023?
For me, it's really about picking the right industries. I'm looking at entertainment, resorts, airlines, the things that people are still willing to spend on, even if inflation is still hitting them high.
And Dan, you got 15 seconds. We're moving on then. So what's your market resolution for 2023?
All right. First resolution, lose weight. Second resolution, I want to be where the dividends are.
That's good. You kept it in 15 seconds. Appreciate it, guys. Thank you, Dan, Erin. I appreciate the conversation. This is good. Hopefully, we can make some money in the next year. So, President Biden.